Lee Harris over at Limestone Title and Escrow. Danny selling one of his rental properties. He wants to know more about a 1031 exchange. He's not sure if it's worth pursuing. So here are his questions, Lee. What is a 1031 exchange? Let's start. Let's go down the list. Let's start with that one.
Okay.
What's a
Okay.
1031 exchange? Yeah.
1031 references a tax code section, which is tax code section 1031, which allows for people to not get rid of taxes, but defer taxes on capital gains. If you have a property that's held for business, you can do a replacement property and you can roll the funds, whatever profits you get from your first transaction over into your second one, and you don't have to pay that capital gains on that transaction. You can keep doing this and keep doing this and keep doing this until the end. At the end, somewhere down the line, the capital gains will be due, but you're deferring that, which gives you more money in your pocket to buy, to upgrade, or to buy a different type of property, or to keep investing without having to pay a lot of taxes on your profits. So that's the general gist of a 1031 tax exchange.
Danny's asking then, what is the time frame involved for doing a 1031 exchange?
Okay, that's a very good question. The whole thing about a 1031 tax exchange is you have to follow the IRS's deadlines to a T. If you don't, if you miss it by 1 day or 1 minute, you're going to get your tax. So you have 45 days after you decide to do a 1031 to identify your replacement properties to your intermediary. The intermediary is the person who's going to handle the funds. You can never touch these funds. They're not going to go into your bank account. They're going to go into your intermediary's account. So in 45 days, you're going to identify these properties. Then you have 180 days to close on one or two of those properties, however many you're going to close on. Has to be one of those properties, and it has to be within that time frame. If for whatever reason it doesn't work out, then you will owe the tax. So we do have some qualified intermediaries that we work with, and they're very good and not very expensive. So if you ever want to do one, the best thing to do is to, at the very beginning, start out contacting someone so you won't mess up the deadlines or how to deal with the funds.
Okay. And I think your next question on this, Danny, we've already answered, that was, what's the advantage of doing a 1031 exchange? And Lee says it offsets the taxes that are coming in on that. And finally, he says, what is the cost or out-of-pocket cost or funds needed to do a 1031 exchange? So what does it actually cost him out of pocket?
Yeah, usually a qualified intermediary. I mean, I know the ones that we work with, I think, are less than $1,000. It's probably going to be in that range, maybe somewhere between $900 and $1,200, depending on which qualified intermediary you choose. And that's really the only expense you're going to have, is that you have to pay this person to handle the transaction for you. Other than that, it's just a regular sale or a regular purchase. And you'd pay your typical closing costs, your typical prepaids, your typical escrows, that kind of thing.
Okay, so $1,000, and that's a one-time deal?
Yes.
Or every time you do a 1031 exchange?
Every time you do a 1031, you're going to pay your qualified intermediary. Yes.
Okay, but the profit, the money that you save.
Oh yeah, you can keep going and roll it. We have people who started out with a tiny little rental home and just kept 1031ing it all the way up the line, and now they have a 20-plex or something. So it is a good way to save a significant amount of money.
Yeah. Okay. So remember that 1031 exchange in case you don't know. If you'd like to see the future of home photography, we've got it pretty simple. We've got it up on a website. You can see some of the things we do, videos, some of the 3D tours we do. Go to Louisville3D.com. When you're picking a real estate agent, folks, one of the things you want to do is take a look at some of the work that they do to get the listing sold, because your online footprint is what people see first. And if it doesn't look good, you're not going to get the amount of showings that you want to get a bidding war going to get you sold quickly and for more money.